Hi, I'm Emily, founder of Focal Point Bookkeepers, and in this video, I'm going to guide you through how to generate your profit and loss statement using this Excel template. We will go through all of the details so that you can see the profitability of your practice. Once you have this first time under your belt, you'll be able to do this very easily in the following months. So you'll see here this first tab is instructions. So we are going to go through these one by one. And this tab is your P&L. So once we get the data, your bank data, into this tab and categorized, this is all going to self-populate. There's no work that you need to do on this tab whatsoever. So you'll see a couple of formulaic errors here just because there is no data. And once we get this populated, those will show you the correct calculation. So to start off, there are two different formats. This first one, P&L 1, and this bank data 1, these go together and they are highlighted in green. These blue highlighted tabs here, the P&L 2 and the bank data 2, these go together. So you're only going to be using one of these. And to figure that out, you need to download a CSV of your banking transactions from your banking website. So in my data set, you can see here, I've got the two columns. I have one for any credits or deposits to the account, and then I have a debit for any of the withdrawals on the account. So now that I know which format I'm going to be using, I am going to hide these two tabs to streamline and just simplify the way this workbook looks. And we're just going to be working with this tab here, Bank Data 2, to format the data. So the first step is going to be to update this tab with the month and the year that you are generating. So in this example, we are going to be using data from January 2024, and I can update both of these tabs here to show that that is the month that this data represents. And you'll notice that now we're already 5 steps through this process, and these first few won't be necessary to duplicate in the future months that you use this. So I just don't want you to feel too daunted at the number of steps in this instruction list. It's mostly just meant to be a complete instructions for getting all of the details correct. Okay, so now we're going to take our data and copy paste in as values. Depending upon your bank, this is going to look different, but it's essential that you've got the amounts. So whether that be in 2 columns here or on the other P&L tab, let me show you. It is simply 1 column for the amount, and you'll see positive and negative numbers here. So what's important is we've got the amount, the description, and the posted date. So you might have to do a couple copy and pastes depending upon how it's formatted, just to get these important pieces of information in here. Account number is here just because that is what is included in my data set and will be most likely included in many bank exports, but it's not necessary for any of the calculations. So I'm going to paste my data in here, and I'm going to paste in as values just to remove any formatting that might exist. And now that you've got your data pasted in here, you'll see that this formula in the cell is calculating an amount here, and then we're going to go through and categorize in this amount here. So it's really important that these two columns, nothing is deleted from there, or it will remove the automations of this template. A couple of other notes. If you have a checking and a savings and a credit card, which is typical, you're going to paste all three data sets in here, one after another, into the same sheet. And then you'll have all of your banking data in this one banking tab. So that might determine which tab you want to use too, if perhaps your banking data exports are different. So choose the one that's easiest for you that aligns with your bank account exports. Once you've got all of the data in here, it is also an option if you need to add something that wasn't perhaps included. Perhaps you purchase something using a personal account or personal card by accident, and you need to add that in here, then by all means just type in the amount, write a brief description here, and put the date in, and those transactions can be captured as well. If you find that you're doing that a lot, then it might be a good idea to kind of review that process to make sure you're separating your business and personal accounts. But you can add those one-offs in here if need be, just to make sure that your P&L is an accurate look of your financials and your profitability. Now, once you've got all the data in here, you'll want to pull this formula down. So say that my data set exceeds the formula that's already in here. I'm just going to pull this down to the bottom. And if it goes a little bit longer, these are zeros, so it's not a big deal. It's not going to pull in anything extra to your P&L. But you can also delete them to make this fully aligned. And then what we can do here is you'll notice that there is, when you click into the cell, there's a drop down. So these are the accounts that are industry aligned and make it a much simpler, straightforward process for you to select your revenue accounts and your expense accounts. To give you a little bit of background on the structure of this sheet, this list is being pulled from this standardized chart of accounts for therapists, and you'll see that all of those accounts align to what is here. So this should not be changed. This is created so that there is standardization in your finances. Some of the accounts, owner contribution, owner distributions, So this is if you deposit any personal funds into your account, you're contributing to the business. Owner distributions are any draws that you're taking as an owner that you're paying yourself, not via payroll. Everything else is relatively straightforward. There's a few different categories for classifying your revenue based on self copay, insurance pay, other revenue, and then any refunds and adjustments. Be cautious when you're selecting direct expenses versus indirect expenses. There are some that look similar, supply accounts, and just pay attention to whether that is an actual overhead cost, which is an indirect expense, or a direct cost, which is a cost of goods sold, cost of doing business expense. I go into this in a little bit more detail in another video, which I will link here. Scrolling down to the bottom of this list, we've got interest expense. So any balance, if a credit card wasn't paid off and there's an interest expense there, any loan interest expense, that would be coded to this account here. Depreciation and amortization, don't worry about those. Those are typically for an accountant to take care of. Interest is taxes, and then we've got interest income. So the flip side, if you've got money in a savings account that's earning a yield, any of those deposits can code here. Suspense is something you are not sure how to categorize. You can code that here so you can see your profitability still, and then go back to it to code it to the correct account later. And this exclude is going to do exactly what it says. It's going to exclude it from your P&L. And a reason you might exclude a transaction, a very common one is going to be a credit card payment. So you've got your checking transactions in here, and you've got your credit card transactions in here. So your expense transactions are going to be coded using the transactions from your credit card bank export. The payment then itself is a duplication of that cost. So you can exclude that payment because you're coding all of those credit card transactions individually one by one instead of using that bulk payment. So that's one thing that you would want to exclude. Other things, so you can reference anything that is going to hit a balance sheet account would be excluded. So something else that might come up is any bigger equipment, furniture purchases. The exact amount always varies on who you're going to ask. But if it's at least a few $1,000s, something that's going to be depreciated, meaning you're going to expense portion of it in the future months for however many months. So say you bought something for $3,000 and it has a useful life of 30 months, you're going to expense $100 each month so that your profitability is an accurate reflection of how you're using that resource. So maybe I already said too much about that, but if you have a big purchase that's going to be depreciated, that would be something that is excluded as well. And if you have any questions about this, want more information, please feel free to reach out. This is where the nitty gritty of accounting kind of gets involved. Okay, so we've talked about all of the account types. And then your next task here is really just to classify all of these transactions by selecting an account. So, a couple ways to do this. If you don't have a ton of accounts and you want to simply go down the list one by one and select the appropriate account for each transaction, that's one way to do this. The other way, which can streamline this process and save you a bunch of time, especially if you have a bigger data set, is to filter up here. So if I filter by deposit, and this is example data set, so you're not going to see the same description on all your deposits, which is actually a benefit if you're doing it this way, because you can copy and paste this account into all of the other ones that are going to be the same category. And that will drastically speed up this process. So you can see here that everything that was a match to that filter criteria, I could then copy paste the appropriate account right in there. So if you've got a vendor and you want to type that vendor's name in here and have all of those pop up, and then select that account, copy and paste to the rest, that will speed up this process. We're going to look at one tricky example, which circles back to needing to use the exclude account. If you have a loan payment, like I have listed here, on your P&L, the only thing that is deductible is actually the interest. So if your loan payment is a combination of the principal payment on the loan plus the interest payment. So what we want to do is split this out. So just like if you were to manually need to add a transaction, I can manually duplicate this and then create the split between the principal. So I might make a note here, principal payment and the interest payment. And then I'm going to make sure I've got the same formula in here by copy pasting, and then I can select this. So the principal payment actually is what is excluded. So we will exclude that one. And then we will classify this as interest expense. So in these cells too, as you've noticed, you can type in to populate the account as well instead of scrolling through this list. So that can also be helpful from time to time. And now we'll clear our filter and make sure that we've got, that one ended up all the way down there. So just make sure whatever manual entries you are making are included in the sheet, as we've done here. Okay, so I've gone through and populated the rest of these transactions. And the last thing I'm going to do is filter by any blanks that are here. So if I remove this first one here, you'll see that I have a blank cell, and I want to make sure I don't have any blanks because that will exclude that data. So I'm going to add that back in. And then I am ready to review my P&L. So that is where the bulk of the work is going through your transactions and categorizing them appropriately. It may take a little bit of time at first, but it will get easier, and the more attention you can pay to it so that you're categorizing all your transactions properly, the more accurate your profit and loss statement is going to be. So here, all we need to do is jump over to this tab, and you'll see that you've got your fully automated P&L statement here. On the top, you've got your revenue accounts and your direct expenses or your cost of goods sold, which gives you gross profit. You've also got the percentages in here as well. So the portion of each of these categories adding up to the total. And then below, you've got all of your indirect or overhead expenses and the portion of each category to that total. Now, I want to touch on one particular thing, which tends to be one of the mistakes that is made, one of the accounting mistakes, common accounting mistakes that's made really for any sole practitioner, is that when you're paying yourself as a draw or through distributions from your business, as opposed to being on payroll and actually paying yourself, paying your taxes through payroll and receiving a W-2 through your business, any salary that you pay to yourself in a draw is a distribution. It's actually an equity account, which means it doesn't appear on the P&L. So in this template, I've included that here and it calculated an adjusted net income because this is a really important and often bigger expense of your business cash flow wise. So then you can kind of see what your business is making after you pay yourself, which is important, and your profitability before you pay yourself and after you pay yourself. So I wanted to call that out because it is an important metric and something you should be looking at and analyzing to see how profitable your practice is and to see how much you can afford to pay yourself. So there's the data on the left. And on the right, there are a few charts to represent this visually. So you've got your revenue here, your direct expenses, cost of goods sold here, and then all of your indirect or overhead expenses by account here to give you a much more easily digestible breakdown of where your money is coming and where your money is going. One of the great things about doing this on a monthly basis is that you can start to notice some trends in your business and ultimately give you the information to help make better decisions for your practice and for yourself. So last instruction here is to duplicate this for the next month. All you have to do is, here, let me get back out of this. I've got this tab selected. I'm going to hit the shift button and I'm going to select both of these tabs, right click, move or copy, create a copy. I'm going to move it before the chart of accounts so that I've got my January data here and then we're going to assume this is going to be my February data here. All I would need to do is replace this, go through that same exercise to add in your transactions here, update the month. So if this is February, I'm just going to change this like so. Do the same thing on this tab, update the date here. And you'll just go through that process monthly to generate a profit and loss statement for your practice on a monthly basis and start to review your performance and be able to use the data to make better decisions. All right. If you have any questions at all, if there's something you get stuck on, or if there's something you would like, maybe in addition to, please don't hesitate to reach out. My email is listed here at this last instruction. So use it if you need it. I hope this is helpful and have a great day. Thanks.